What is going on, everyone? Thank you all so much for tuning back in for another little recap we got going on here on Monday. And before I start the video, I do want to let you guys know that Friday there was no post that went up for this channel. I don't know if any of you even noticed that, but the reason for that was because me and my brother both unfortunately got pretty sick this whole weekend since like Thursday afternoon last week, and neither of us even woke up on Friday to trade. We just really weren't feeling good or anything like that. So I am thankfully feeling a lot better today, and I did trade, so I am showing up for another little recap here with you guys. So, as you guys could tell from the thumbnail, it was a nice little red day today, right? I was down $121 on SQs. But if you guys do notice something, look at my filled orders. 6 orders, 6 fills. That means I took 3 trades only on SQs today. And I want to go and talk with you guys a little bit about that, but me and my brother have really been thinking about it a lot, and I don't know if any of you out there can relate, any of you traders out there, but me and him have obviously been trying to be profitable, right? We're just been working to get better and better, and one thing me and him just both really talked about was the fact that we really struggle with averaging up on trades. Averaging up is one thing that we've really tried implementing, but every single time it almost seems like we always buy in originally at a good spot, and as it starts falling, we'll look to average up when we get a little more confirmation, only for it to actually just reverse on us, stop us out, and then like fall right after that, right? Because we get stopped out averaging up at a lower area, so our stop loss it can't be as high anymore because we're averaging up down here. It brings down our overall average price for whatever stock we're trading, so we do have to make sure that we minimize risk more. But yeah, that's something we've been talking about. I don't know if any of you out there can relate also, but me and him really struggle with excuse me, we struggle with averaging up a lot, and it just really always makes me uneasy every time I have to average up and everything like that. So me and him decided that we're gonna try just not averaging up anymore. And the way we want to still keep an edge, just like any of you can, without averaging up, is just making sure that every single trade, the risk to reward is on point. And what I mean by that is, let's just take for example, basically right around up here. Let's say let's use the amount I traded with today, $5,000, right? Let's say I were to buy in with $5,000 up here near the top view up, looking for a play for SQs, right? For it to fall the NASDAQ. If I were to buy in here with my full position size, I need to make sure that this trade, in order for me to have any type of edge on it, I need to basically make sure that the profit I could potentially make will always outweigh the risk of my trade if it were to go south. So, for example, let's say I were to buy in up here with $5,000, and I'm giving it a whole percent. It can push up before I stop out, right? So that would be $50, right? 1% of $5,000. If I'm risking that much for a loss, right? $50 or 1%, would it make sense to me for it, let's say it did start going my way, for me to sell underneath a percent or even a percent for those $50? No, right? Because that is just a 1-to-1 risk to reward ratio. There is no edge. That's basically gambling at that point. If it went your way or if it didn't, you lose the same amount. That's literally just gambling. You need to have some type of edge because after all, trading is in the long run just a numbers game. So you can't have any type of edge if every time, let's say it starts going south, you like to bag hold a lot and you give up 1%, let's say $50, and anytime it starts shooting down a little bit, you lock in profits early and you're only up like $30 to $50 on that. Long term, that's not going to be in your best interest at all. You want to make sure that, let's say every time you take a trade, your profits are going to be at least double of what you're willing to risk, right? So in this case, let's say I got in with $5,000 up here, and I need to make sure that wherever I sell at, let's say I can make $100, whereas if I were to sell for a loss, I'd only be giving up half of that for $50, right? 2-to-1 ratio is not like the limit, right? Some people have like a 4-to-1 ratio or something little more crazy like that. And basically, you just need to make sure the odds are in your favor, right? Don't trade anything like a 1-to-1 ratio, or even worse, like a 1 to whatever, making sure that every time let's say you did take that type of setup, right? It wouldn't be smart because you don't want to give up more than you're willing to make on the trade. If you were to take 10 trades and run that same type of setup, right, where you're not making as much as you're going to lose, then obviously you're going to end red in the long run, right? There's no question about it. You might get lucky your first trade or two, but since you're giving up more, if you have a bad risk to reward ratio and you're giving up more, then it wouldn't be smart because you're ultimately going to end red. So, because me and my brother are only looking to take 2 or 3 trades now that are really worth it a day, whereas some days I'd have like almost 50 fills, taking like 25 trades. I find it's really not the most productive because a lot of those times when I do take those trades, a lot of them aren't even worth it, right? I'm taking 25 trades and they're not even making me like basically be very green or anything like that. I find it kind of a waste to take that many trades, and I really want to focus on quality versus quantity and making sure that if I do take a trade, it offers a decent sized profit that I'd be happy to walk away with on a day. After just taking like 2 little trades, I have to make sure they're really worth it. So, another pro of another little benefit of taking few trades is you guys are going to be able to see now all of my trades. Before, when I'd have like 25 fills, I wouldn't even want to show you SQQQ, right? Because while it shows you everything here on my trades, if I had 25 fills for buys and sells, it would just look so cluttered. And that's why it doesn't look as cluttered anymore, and I'm fine sharing with you guys kind of how it looks on the ETF with all my filled orders, right? So as you guys can see here, the ones to the left are the earlier trades. So here's my first buy, first sell, first buy, or second buy, second sell. And yeah, it's just a lot more simpler so you guys can see. And I'm going to walk through with you guys my trades today, what went wrong and what I could have done better. So leading into the market open at 6:30 in the morning, like I always tell you guys, I like to look at how the Nasdaq was trading pre-market recently, right? And leading into the market open, the Nasdaq was trending above this middle VWAP now, this purplish line here. And just like it did before, right, when it did start trending above the middle VWAP, it wanted to kind of rally a bit like it just did here in the pre-market, like around 1 o'clock in the morning as well. So when the market opened up at 6:30, right around here, here's the timestamp again, just to remind you guys. So at 6:30 when the market was opening up, would it have been the dumbest thing to take a TQ's play? No. The Nasdaq was showing signs that it was trying to uptrend, and when it approached the middle VWAP, just like it did before, it did try to rally, obviously, right? I personally didn't take a trade because right when the market opens up, there tends to be a lot of change of directions and a lot more volatility, so I found it, excuse me, a little riskier to take a trade then. I just didn't want to take part in that, so I did my part in waiting, and when the Nasdaq started to rally up really quick, my first trade was at 6:31 in the morning for SQs. And why did I want to take a SQs play up here? If you look at the 5-day 5-minute, anytime the Nasdaq approaches the top VWAP, right, this top pinkish line here, it usually always tends to follow with some type of sell-off, right? Did it once here, ends up coming back up, touching the top VWAP, selling off again, almost does it right around here again, sells off, and then right around here in pre-market at 1 o'clock in the morning, ends up hitting top VWAP and sells off again. So today I just wanted to do my part and follow that trend. Now, excuse me guys. Now as for why did NQ have a nice little rally, we can't be surprised that something like this could try and form now, given how bearish the market has been recently, right? The market has consistently, this is a 5-day 5-minute, I can show you guys different time frames, a 10-day 30-minute. The Nasdaq has consistently been selling off a lot, right? It's been very bearish, so now we're approaching some type of territory where the Nasdaq can start looking to be seen as oversold, right? Meaning it's not maybe as good of a deal to want to get into SQ still, because just given the larger time frames, it has tended to bounce right around here. We're approaching the lows, right? This oversold area. Now, can the Nasdaq obviously keep on falling and make lower lows? Definitely. But I'm just saying, around these areas, it should be no shock to us why we do start seeing some type of move for TQs that wants to form, like kind of how it did today, the first hour of that the market was open, right? It was very bullish. It was pretty strong, and So at 6:31 in the morning, I took my first trade. Unfortunately, I was willing to give up 30 points right around at a break above the top view up. 30 points for the Nasdaq, I mean. And I was gonna at least sell if I was up 60 points from where I bought in, or a 2-to-1 ratio. So my first trade went south, unfortunately, ended up flushing up, stopped me out right past the 30 points. So I took my first loss of around $50 on that trade. And I ended up taking another trade at 6:35 just a few minutes after that, when I saw that the market was, trending above the top view up. And most of the time when I have been seeing it recently, since the market's been very bearish, it does tend to break above the top view up and maybe push a little bit above it, but ultimately it does sell off. So I took another trade at 6:35 in the morning, right around here, thinking that I was only gonna risk it, basically making a new high, and I was gonna try and ride it down at least all the way down to the kind of the middle view up SMA line, and that would be a good risk to reward ratio, obviously, right? And unfortunately, I did get hit by this little fake out right here. It did end up flushing higher, and I cut it only for it to kind of be a little fake out, and it did fall. Ultimately, I would have been stopped out anyway because it did fall and flush up, but I did take another red trade there. That one was smaller, like around $30. And then another last red trade at 6:42. So right around here is 6:42 in the morning. Once I got stopped out again, I saw it wanting to go up, but it did, right, stop me out and ultimately start falling again. So I thought that this was going to be the little fake out I had. I tried one more time up around right around here, this area, and I did start profiting, right? The Nasdaq was falling, but ultimately, unfortunately, caught a support at this EMA line, this blue EMA line here. It did kind of find a higher low off of it and ended up rallying and stopping me out, obviously, for another like $50 loss. So if this trade, basically, if it didn't catch a support here, I wouldn't have looked to sell until it came kind of right around this area, right? Because from where I got in, the risk to reward, this would have been all my potential profit, whereas my risk would have been kind of at a new high. Definitely seems worth it, doesn't it? The profit I could have made will outweigh the loss. So unfortunately, it did take 3 red trades back to back today. That's what led me down to be um, down a nice little hefty amount. But what can I take away from today that I noticed that definitely led to me not being able to take part in this nice other sell-off, this huge opportunity, is look at my trades. I was in and out of the market within the first 20 minutes the market was open. I need to be a little more patient and let the market direction really kind of reveal itself, because I was by 6:50 done trading. I was down too much to want to take another trade, even though I knew there was a good chance that the market could still kind of try and break above the top view up, but end up getting rejected and then start selling off like it has consistently been doing, right? If I saw this thing break out above the top view up and keep going, holding multiple candles above the top view up, then that'd be a different story. I'd look probably to get into TQs. But when I saw this happen, unfortunately, I couldn't even take part in it because I was read so much already in a day. And what I need to take note of is that I need to be more patient. I shouldn't be trying to make my money the first 20 to 30 minutes the market is open and calling it, because that's just being pretty greedy, right? The market is open for multiple hours after that. It's open until 1 o'clock, and for me to be done by 6:50 just because I took multiple red trades back to back to back, with back to back to back, without even basically giving the market direction, giving the market time to find its true direction. And because I didn't do that, I couldn't take part in any of this opportunity I saw, where it did eventually not want to keep going and started falling, right? Pretty aggressively. I missed this whole opportunity down, and yeah, I was the guy that ended right $120 on SQs, all because I was too greedy, right? I need to take note of that. First 20 minutes, that's it. I gave myself to try and predict this, that's I should be definitely a lot more patient. I shouldn't be so quick to rush into trades after I'm red. That's definitely where I got basically all my errors today. That's what led me to be red today, and I need to be more mindful of that and look to just cool off and just try and space my trades out more throughout the day. I don't know if any of you can relate to that. Right when you take a red trade, you want to maybe take another one right after that, and it's just can be tempting, but just like you guys saw today, maybe not the smartest thing to do, right? So that's it with the recap today. That's what I'm going to leave you guys with. I hope you guys learned something and make sure to pay attention to these bigger time frames. While we are looking oversold, there could be some type of support, right? If we try and hit, nothing has to happen and it could still keep following this pattern, selling off and making new lows, right? So let's not just be so quick to think that the market has to recover now because it's oversold, right? A lot of people maybe went bullish on the day thinking it was for sure going to recover because, like I just showed you in those time frames, it was oversold, and they saw this move only for the market to, the first hour it only uptrended, only for the rest of the day for it to really just start selling off again, right? Excuse me, guys. So yeah, that's it. Thank you guys all so much for watching. It's been another recap. Very excited to kind of come back the whole rest of the week and bounce back. Thank you guys all so much for watching and have a great day.